I believe Alibaba is a future multibagger, and here's why. But before we get into that, what's a multibagger? Now, Peter Lynch was one of the first to talk about multibaggers. It's the first time I heard about it when I read his 2 books. Very simple. A 5-bagger is a company that you bought and went up 5 times. So you bought it at 30, went to 150, it's a 5-bagger. If you bought it at 30, went to 300, it's a 10-bagger, and so on. Very simple, very easy to understand, but it's a great term in investing and involves a lot of compounding. So that's really quick what that is. Now with Alibaba, there's a lot of fear surrounding Alibaba, but you've also seen a lot of great investors go out there and buy Alibaba. I mean, look at this chart on the stock price. In the last 5 years, it's down 58%. That's a big drop. This high over here of around $319 a share was on October 27th, 2020. China in general has a lot of fear behind it, and the markets are plummeting on China. The question I have to ask yourself, the question you need to ask yourself is, do I think China is going to be a formidable power economically for the future? Yes, they have the Communist Party there, but as time has gone on, it's the fastest growing middle class. It has its issues, but it's still a growing economy. So powerful, in fact, that a lot of companies, including our own, are buying from different countries because China has become so wealthy that it's the cheap labor isn't as good as it used to be. And that's a big key there. Now, Alibaba is the biggest company out there with amazing growth potential. Now, some of the things I love, $192 billion market cap, $200 billion enterprise value, not much different there. Look at this free cash flow. Let's go pull up the cash flow statement and let's look at the annual cash flow statement for Alibaba. $23 billion right here in the previous year. They had a drop in the year before that of 12.4, but before that they were a growing free cash flow business. So $190 billion market cap, generating $23 billion in free cash flow. And they're smart. They're buying back shares. That's the big key here. They're buying back shares at the right time and the right prices. They're not doing what these other high-flying tech companies selling for 40 times free cash flow are doing. They're buying back shares at a good price. That's the key to share repurchases. There's a great book out there called 100-Baggers by Chris Mayer. And in there, he talks about a few things needed to get to a 100-bagger level. One of the things is a low multiple. So a company falls or it stays at a low multiple, single digits times free cash flow and earnings. The company buys back share, and then the company keeps growing its profit over time, growing its revenue, and the market finally realizes it's a good company, and the single digit price to free cash flow starts to become much higher. So it's called multiple expansion, when the free cash flow multiple is low and then goes to a higher level. Right now, the free cash flow multiple is around 7 or 8. Actually, it's around 8x right now. Single digits on a company that's so large. If it can get to 20x, that alone is 2.5 times its money just by doing that. If it doesn't even grow its free cash flow at all. That's how you get 2.5 bagger just off the bat. Now, the sentiment needs to shift on Alibaba. Right now, it's very negative on China. And hopefully, if that shift does happen, then it comes higher. Now, guys, keep in mind, I don't know if I'm going to be right on Alibaba. I own Alibaba, and it doesn't mean you should. Michael Burry owns Alibaba. A lot of big name investors, but don't buy a company just because we do. There is a lot of fear in China. If you don't trust this China stuff, do not invest. So let's see what the analysts are saying about Alibaba currently. Go to analyst estimates here in our software. Not much growth in the earnings per share. $9 to $10.70 here in the next 4 years. But currently, this is selling for about 8 times the earnings. Let's go look at the revenue. Now, this is what's confusing to me. Some decent revenue growth, not great. Consistent revenue growth, the earnings per share is not growing, even though revenue is going up and they're buying back shares. So not exactly a sexy situation, but remember, you don't need sexy to make a lot of money if they're buying back the right shares at the right time. All right. So let's go to our stock analyzer tool to sit there and understand, okay, if we use our stock analyzer tool to predict the future, what could this company be worth and what are the returns we buy today's price? Now, before we get into that, guys, I want to let you guys know, If you're new to our channel, we use this software. I use this software daily. We created the software because the users kept seeing my Excel sheets and saying, how do I get that? So we made the software. Now, here's what you get in this software that makes it so incredible. You get all of this software in a mobile app. You get the 8 pillars. You get 30 years of financial data and growing. You get the stock analyzer tool, which you're going to see just next. You get exclusive content from Mo and I. You get access to Mo and I. You can message us in our community every single day and it notifies us. You get news. You get to put all of your stocks into an 8-pillar portfolio to see how they look as one company. You get retirement calculator, which I use every week. But most importantly, EM community chat with like-minded investors. Guys, investing is a lonely road, especially being a value investor. We've had over 16,000 people sign up for the software since we created it, and there are thousands of people active every day, every week, talking, and you can talk to them about your ideas. And guys, it's $49 a month, but we're running a special $7 for 7 days. That's it. $1 a day gives you all of this, even when you sign up later. And look at all our other competitors and how expensive they are, and we don't get that. So go to everythingmoney.com and sign up for $7 for 7 days. Now let's check out the stock analyzer tool and what I've done in the past. And then I'll show you how this company becomes a multi-bagger, because that's the important part here. So even when we're done with the stock analyzer tool, you need to stick with me for just 2 minutes longer so I can show how it becomes a multi-bagger for decades to come. So I did a 10-year analysis. I went conservative. 3%, 6%, and 9% revenue growth. Guys, this is nothing to write home about. Nothing to write home about. And I think China's economy will drive that revenue growth a lot faster, especially as Alibaba does things more internationally. Profit margin, I did 15, 19, and 23. Free cash flow, 17, 22, and 27. It's higher than its last 5 years, but I think they've taken hits lately, and hopefully they're going to be able to get back to those normal levels. Now, PE. I'm going 16, 18, and 20. The PE has been hurt a lot lately because of the negative sentiment on China. Understood. But I'm thinking that as China becomes stronger and stronger, that PE will go higher and higher. So this is the PE I project for 10 years out. I could be wrong. It could be higher. It could be lower. And now I did a desired annual return of 9%. I'm not putting any margin of safety, just a normal market return of 9%. Now remember, guys, I'm going to hit the Analyze button. Still stick with me so I can show you how it becomes a multi-bagger. Hit the Analyze button. I have a low price of 120 to 140, high price of 340 to 400, middle price of 200 to 240, with amazing annual returns here at the bottom. Now, again, there's a lot of fear in China. There's a lot of things going on there. If you fear that, you should not invest. This is not for the faint of heart. This stock is likely to go down even further. If you can't stomach that, do not buy that. And if any of these things are wrong, the point is I'm trying to make is if I had 30 opportunities like this to buy a company like this, I would do it all day. I don't know if I'm going to be right on Alibaba, but if I have 30 companies like this, I will do very well. So how does Alibaba become a multi-bagger? Well, as you saw, I did 6% revenue growth for 10 years. Let's say I do 6% revenue growth for 20 years. That takes the revenue from $128 billion today to $410 billion in 20 years. Okay. Now, I had a 20% margin on that 410 profit margin. That gives me $82 billion in profit for the company. $82 billion. Multiply that by 20 times earnings. Okay. That gives the company a value of $1.6 trillion. Okay. So we have a $1.6 trillion market cap business. Now, they currently have 2.5 billion shares outstanding. Let's say they buy back shares, they go down to $2 billion. You have 1.6 trillion in value divided by 2 billion shares outstanding. It gives you a share price of $800 per share. The current price is 75. That is all day long a 10-bagger if I'm right. Okay. That's the idea of how you get to multi-bagger. It takes a long time, but look at this. Only 6% revenue growth. I'm not talking about a lot of revenue growth here. So I'm hoping even if I'm wrong on this, I still have a 5 or 6 bagger here at some point in the next 20 years. Guys, everythingmoney.com, $7 for 7 days. Come join now.